What's up, everyone? 7-Star Mike here for the new Trade Talk Media, where we help retail traders simplify trading and increase their profits. And today I want to introduce a strategy that does just that: simplify trading. Now, it's not as simple as when this candle crosses this line, we enter a trade, but it's pretty close to being that simple. You do want to combine it with price action, so the more advanced you get as a trader, the more successful you will be with this strategy. But it is a great strategy for new traders and advanced traders alike. And today I'm talking about the ORB strategy. ORB is ORB, stands for Opening Range Breakout. And basically what we're doing is plotting the high and low point of a particular range, and that can change depending on your trade style. And we're basically just waiting for the price action to take us above or below these lines. Now, there's nothing magic about it. It's just a support and resistance trade style. You'll see that the levels we're plotting are just an opening range, high and low, which is just support and resistance. So there's nothing magical about it, but you'll see that these lines come into play and make a trading entry a pretty easy decision for you. I've got a bunch of examples for you today. Let's jump into the charts and let me explain to you how to set up and how to use the opening range breakout strategy. Okay, I've got a few examples to show you. We're going to start with Apple. Now, I am a day trader and a scalper, so I have the 1-minute chart set up as my default charting. And what we're going to do first is set up this script for you. So on Thinkorswim, click on this button here and go to Studies. Now, this one is not a standard study. This is custom, so you guys won't see this first one. I'm going to put a link in the description below to give you this custom script. And we're going to go ahead and put the ORB onto our charts. When you guys have this, there is the ability to change the time frame of it. If you go to the gear wheel here, you can see where it says begin and end. I have 9:30 and 9:45. Now for me, I have found that the 15-minute time frame works the best. And the reason for that is it cuts out the volatility of the opening bell for the first 15 minutes, but still allows me to get a good portion of the run on any kind of a trending day. Now I know people that use 5, 10, 30-minute, 1-hour time frame for the ORB. So it really comes down to your personal preference, your risk tolerance, your aggressiveness. There's a few things that go into play, but I found that the 15-minute time frame works best for me. But this is where you would change your settings if you want to try something else. Beginning and ending, 9:30, 9:45. That cuts out the first 15 minutes of the day, and we're going to click OK. Now, I'm going to make this really easy for you. I want you guys to type in EXPO. Where you see moving average exponential, I want you to add that to your chart also. Now by default, mine is set to 34, yours probably isn't. So go to that gear wheel again, and in the length section, go ahead and type 34 for the length right here. Now, why I use the 34 EMA is a whole nother topic for a whole nother video. That's too much time. I can spend 30 or 40 minutes talking about just that. So for now, just go ahead and put in the 34 exponential moving average on your chart. Click OK and click OK. So now we've got two things on our chart. This green wavy line is the 34 EMA, and these red and green lines are the ORB strategy plot. So what this strategy does is take the first 15 minutes of the day. You can see I'll zoom in here. The low for the first 15 minutes of today was 315.63, and you can see this thick red line plots 315.63. Now the script is going to do this automatically for you. You don't have to draw anything in. So that's what I like about the script is on my main screen, I'm watching a bunch of different tickers, and at 9:46 in the morning, all of them have these lines drawn automatically. The high point for the first 15 minutes of the day was this right here at 319.55, this candle. And this line on 9:56 is automatically going to plot that high. These two smaller lines are the fib extensions. So I actually don't use them a whole lot as far as guiding me where to enter and exit, or where to exit rather. But you can see here, it almost touches it exactly. This one, this one, this one, and even over here it hovers. So some of my setups, I keep them on there just for a general reference. I'm not always using those to guide my entries and exits, but some of you guys might like that extra confirmation. And again, if we're trying to keep things really simple, we're going to go ahead and leave them on there just to give you a visual of levels you might be watching. Now, what this is doing again, is plotting the high and the low for the first 15 minutes. And what we're trying to see is a break above or a break below. And we're going to take a trade for either calls or puts, or if you like common shares, you can buy shares and short them in the direction that it breaks. There's a few things we want to look at, and there's a few different ways you can trade this. So I'm going to give you the safest way to trade it and try to make things really simple for you. One way to trade it is when it breaks above this line, you take that trade. So you can take a trade here, you can scalp it. You can take a trade here and scalp it. And this is the safest entry. So why is this one the safest? One of the ways I like to trade is when we're looking at support and resistance, I want to see a level break. I want to see it come down to test that level and hold and then climb again. So in this case, we broke above it, but when we tried to test it, we failed and we dropped below that level. This candle, we broke above it, but we dropped below it. This candle, we broke above it. This time, when we come down to test this level, we're now holding as support. So this is the safest entry for you. And if you look at this green wavy line, it's also just below where the candles reach there. So there's two reasons why we can get in here with a relatively low risk entry. It broke above this resistance line, came back to test it, it's holding as support, and the 34 EMA is just below that, also acting as support. So this line, keep in mind again, is 319.55. Now what we're watching to do is basically see where do we find resistance. So we're climbing. When we come back down to test, you can see we test that 34 and it holds. Climb a little bit, the candles are getting tighter, so we're getting some compressed price action, but it's still holding above the 34. We pop and you see that it does go to this first Fibonacci extension level. So this is 321.05 from an entry around 319.55. So that right there is pretty good. If you're trading options, you can get a good move out of that. And then if you don't sell, it starts to drop a little bit, but you can see it doesn't drop below our entry point yet. If we entered over here on the break of this line, or if we entered here on the first test of that line, you can see we're still above that. So there's no reason to exit. You're not red on this trade. So as we start climbing again, you can see we break above that Fibonacci level. We come down to test it, it holds as support, and we start climbing again. From here, every time we retrace, we're coming back to this 34 EMA. We're coming back to this 34 EMA. We're coming back to this 34 EMA. So we're using that as our guide that the upward trend is still intact. Now here you can see this big red candle comes below the 34 EMA, and you can see it actually starting to roll over here. So because we broke below the 34 EMA, because the 34 EMA is rolling over, you can see we're kind of just going sideways, going up a little bit, and then this candle here, boom, right below that 34. So what we're watching now is, do we have confirmation that we're staying below the 34? You can see that it drops, it comes back to test the 34, and this is now acting as resistance. So for me, this is a good place to exit. If we exit somewhere up here, this is 322.58. That's just randomly where I have the cursor. So let's just say, let's make the numbers easy. Let's just say it's 322.55. From an entry around 319.55 to 322.55, that's a pretty good move. And it's a relatively safe trade. We have two reasons to get in because it's bouncing off of support. This 34 EMA is keeping us in. And then when it breaks below that level here, it comes back to test that level and it's now acting as resistance. So that is a safe point to exit. Now, you can come over here and say, but Mike, it broke the 34 EMA over here, so why didn't we get out at this point? The reason we got into the trade is because it broke above this level. When it breaks below the 34 here, we're still in a profitable trade. So the reason we entered our trade is still valid. This trade did not give us a reason to get out of it yet. If it breaks below this level, which it didn't do over here, but if it did, that's where we would start looking to get out of this trade. And the reason for that is our trade thesis is that we have a level of resistance. When it breaks above, we're entering. So just because this one broke below the 34, we're still above this line here, which is what caused us to get into the trade. So there's no reason yet to get out of the trade. So then if we come over here, now your next question can be, well, Mike, we broke below the 34, but we're still above this level here. So why are we still exiting this time? The reason we're exiting here is because we have good profits. We've followed the EMA upwards. So we had this upward trend going for the day. And I've also looked at a bunch of other stuff for the day, and we were trending in this direction for a lot of stuff. So this is just going to be a good trending day. When we break below the 34 here, you can see it's starting to curl over. It does get rejected when it tests. So for me, that's a safe place to exit. Now, if you look, we did actually make a high of day after that, but I'm okay exiting here because I'm not really trying to time the tops and bottoms of these moves. I'm just trying to get a good piece of the action. Now, if I trade options, which I am 100% an options trader, I haven't traded common shares in quite a while, a $3 or $4 move for options is going to give you a great return, especially because today happened to be Thursday and I trade weekly expirations. So trading a contract that expires tomorrow with a $3 move in the right direction is going to give you a great return. So that was Apple. That's the first one I want to show you guys, but I've got a few other examples to show you as well. Okay, so next up is Microsoft. Same thing, I'm using the 15-minute orb. You can see it's set to 9:30 and 9:45. And I'm on a 1-minute chart again. You can see up at the top there. Again, I'm a day trader and scalper, so this is just the preferred chart that I use for my trades. And after the first 45 minutes, we have our high and low point plotted. So what we're looking for is a break above or below in one of those directions, and that's the trade that we're gonna take. So we've got a high point here, it rejects. We have a low point down here. In the first 15 minutes, this was the low. So that's why the line is plotted there. And you can see if I zoom in, we break below that line, but just barely. The next candle brings us back above that line. So we're not taking a short here because there's no confirmation that we're staying below that line. Now, those types of things come with experience. The more you trade and the more you use this strategy, the better it'll be for you as far as not entering that trade right there. And you can't replace seat time. So that's just a matter of the more seat time you have, the more you'll see whether or not that's a trade you're gonna take. So we're not taking that one because there's no confirmation that stays below that line. Remember, I said the safest trade is going to be an entry that breaks the line but then tests and holds. So we never really broke and tested and held, so we're gonna skip that one. We broke above it here, but the next candle brings us back down. So again, we don't really have confirmation that we're staying above this level. Now, this one over here, if we zoom in, we break above, we come down to test that level, and this candle we hold. So this is the entry right here. I'm going to zoom back out to give you the full picture here. So we break above that level, we come down to test that level, we're holding as support, we start climbing again. So this is our entry here for the orb strategy. Now, this line here is 182.35. That's the break of the line. So as it comes down and tests that line and climbs again, we're getting in as close to that 182.35 as possible. It's going to be a little bit higher than that because you want to see that that level holds and then we start climbing above it. So you're going to be a little bit higher than 182.35, but it's going to be pretty close to that level. Now this one does turn against you for a little bit, but it's still holding above that level that we're looking for. Remember, our reason for entering was a break above this line. So as long as we don't break below this line, our reason for entering is still valid. And the 34 is still on an upward swing. So on this one, you can actually see it does pause for 2 or 3 candles at that first fib extension level, and then it punches right through that. It doesn't really pause at the second one here. So we've got a nice climb here. The reason I like the 34 again is because look what happens here. We'll zoom in. When it comes back down from that high point, this was the high of the day at that point, it comes back down for 2 candles and touches that 34 EMA directly, and then it bounces again. So zooming back out, you can see that it comes down, it tests that level, and then it bounces again, and we have a nice sustained move upwards. Now, here's that same exit, right? We break below the 34 EMA. The 34 EMA is starting to roll over. You can see here how it's starting to curl. We're below the 34, we test it as resistance, and now that level holds as resistance. So we're gonna get out somewhere on this candle or this one. because we're breaking below the 34, we're testing it as resistance and it's now holding as resistance. So we're in calls, so that's our exit there. So we're gonna say, again, let's make the numbers easy. Let's say it's 183.75. Now the entry is 182.35 or close to it. So again, you've got a nice move from here to here. That's the high of the day. You didn't hit the high of day because we can't time those, but we're looking for an exit. We break below the 34, we test it as support, it holds as support, and it gets rejected. So that's our valid reason for exiting. This one was Microsoft using that same 15-minute orb strategy. Okay, so here we go again. The next one is Facebook. We're again looking for a break above or below these levels. We hit it, that's the high point where this line is plotted, and we get rejected. We break through it, come back down to test it. We're finding that when we test it, that level is now holding as support. We're also above the 34 EMA. So again, two reasons to enter a trade here. This is gonna be a low risk entry. You can see once we enter here, this is around 227.90, and we make a nice big run up to 230. So even if you got in, let's again make the numbers easy. Let's say this was 228 where we got in. This is a nice $2 run right off the bat. Then it does turn against us. And if you want to protect profits by breaking below the 34 here, you can see it start to curl over. You can protect those profits, and you made about maybe $1.50, $1.40 of a move. If you're trading options, again, that translates to a decent profit right there. And the other way, we were talking about the earlier trade where it never broke below our entry. Same thing here. So if you want to be a little more aggressive on this one, our entry is here. That's our reason for entering, was a break above this level. We never broke below that level. So if you're still in the trade, you're following the 34. It does break below it, but the very next candle comes back above it. We break below it a few candles. The next one brings it right back up. And then this one here, we break below it and decisively break below it with that curl and rollover of the 34. Now, it did do that over here as well. We broke below, we rolled over, we came back up here to test it, and it basically held as resistance. We have these two candles broke above the EMA, but one broke above it, and then the next one opened above but closed below. So if you exited over here, that's also a good trade. So again, the EMA is rolling over, we broke below it, we came back to test it, it's holding as support. So this could be a quick trade exit here as well. If you go back to the original strategy where we never broke below the opening point, you can stay in this one a little bit further until the EMA rolls over and we're decisively below it. We're holding as resistance over here. And the reason I wouldn't necessarily get out of this one here is because on this chart, you can't really see it, but I'm monitoring the entire market. I've got a few tickers up, I've got the SPY up, I've got UVXY. So I'm watching a few things that's telling me whether or not we're kind of in a trending day. So if you're looking at this in and of itself, this looks like an exit here. On a day like today where everything seems to be trending and you just have some indicators kind of pointing out that there's strength in the market, the better exit is over here. Now, of course, it's easier for me to say that looking at the entire chart. So again, if you exit here based on the EMA rolling over, testing, holding as resistance, that's still a good exit there. That one is Facebook. And the last one I want to show you, this is the best one of all. This is Visa today. You can see the high and the low for the first 15 minutes are plotted. We're waiting for a break above or below this level. Over here, we break above it. We come down to test it. We test that level, it holds a support, and the 34 is also right there as well. So again, two reasons to enter this trade. This is a low risk entry. So if we get in right here, this level is about the 194 area. As long as we're riding above this 34, we're good. Now we do break below it here. We do have a confirmation candle. So if you exit here, that's 194 to 194.82. So you have likely probably about a 75-cent movement there when you take into account where you're getting filled. So a pretty good scalp right there. Again, this is a Thursday, and I usually trade Friday expiration. So that 75-cent move in that really quick pop is still going to deliver a profit. Now, what I do is bump up the stops as in a trade. I don't set hard stops. I do this manually. So if you're not stopped out here, again, you're watching, this is about the same point in the day where Facebook took its dip. So we're watching the overall market for, is this a reversal or is this just kind of a little correction in the day and then we're going to continue the trend? Today looked like it was just going to be one of those trending days for the most part. So we're bouncing off the 34, we're bouncing off the 34. Here's where we break below it. You can see the 34 starting to roll over. We break below it, we test it, it holds as resistance, and we drop. So if you get out somewhere up here around the 197 area, keep in mind, you're in at 194, you're out somewhere around 197. That is a great move for an options trade, especially for a weekly expiration. I don't recommend trading weekly expirations if you're new or if you're a struggling trader. There are nuances that are different from a monthly contract that you have to worry about for the weeklies. They do move a little more erratically, and if they move against you, you really have to know when and how to get out of them quickly. So for new traders, I don't really recommend that strategy, but if you're experienced with it, this is a great example for Visa today that just made a monster move all day. So that's the opening range breakout strategy. You can see it's a pretty simple strategy. When combined with price action and maybe throwing that 34 EMA on there, you can see how it might help to find some trade entries. So for those that are new, this is a pretty simple strategy to follow. For those that are advanced, it works great for you as well. It's not magic. Sometimes it seems like it is, but it's really just a support and resistance trading strategy. There's going to be fake outs. Like any trading strategy, it doesn't work 100% of the time. If you guys use this, leave some comments below. Let me know how it's doing for you. Play around with it. Maybe the 34 EMA isn't a good fit for you. Maybe the 15-minute time frame isn't a good fit for you. Let me know in the comments below what's working out for you. Reach out with any questions. I'm going to put the link to that strategy for TOS in the actual description below. So that ORB study, you guys will have that drawn automatically for you if you use that download. So again, reach out with any questions. I want to see everyone succeed with this. In the trading group that I'm in, a lot of people have found great success with this. Let me know how it's doing for you guys.